Okie dokie. Good afternoon, everybody, and welcome to today's webinar, Make Real Estate Investments and Earn Passive Retirement Income with a Self-Directed IRA, presented by Next Generation and Liberty Real Estate Solutions. My name is Erica Figueredo. I'm the marketing specialist here at Next Generation. I've been with the company for the past 4 years, just a little bit over. And I'm currently focusing on a lot of the marketing activities for the company, obviously including the webinars that you see today. And I'm also supporting the sales team. So everybody joining today's session is going to be automatically muted. If you have any questions during today's webinar, please use the Q&A tab that's probably located at the bottom of your Zoom control panel. And then if you'd like to, please introduce yourselves via the chat. You can let us know who you are, why you're here, and if there's anything specific that you're looking to learn. So a little bit about Next Generation before we get started. Next Generation is a custodian and administrator for self-directed retirement plans. So those are much like the retirement plans that you would see at any brokerage like Fidelity or Charles Schwab, the only difference being the types of investments that you can hold within them. And we'll get into a little bit more detail on that a little bit later. But for right now, I'm just going to give our very necessary disclaimer, which is we do not provide any financial, legal, or investment advice. So anything that you are hearing or seeing on today's webinar is for educational purposes only. And if this is a strategy that you would like to utilize or learn more about, we highly encourage that you consult with a trusted advisor. So without further ado, I'm going to give Kevin O'Donnell the floor. He is our co-host for today, and I will allow him a couple of minutes to introduce himself and tell us a little about yourself.
Thanks, Erica. Hi, everybody. My name is Kevin O'Donnell. I'm the CEO and co-founder of Liberty Real Estate Solutions. We are an investment company, real estate investment company. We focus primarily in the northern New Jersey market. We do many projects per year. They're all off-market properties that we acquire. We work with a lot of investors, a lot of people who have IRAs that they want to put to work. We have people who are really interested in passively investing in real estate without all the headaches of actively investing. We've been in business since 2016. My wife and I, Lauren Norman, own the company, and she's the creative director. I'm the CEO. We make a fantastic team, if I may say so myself. And we have a fantastic group of folks working with us and for us in New Jersey. I'm also a broker in New Jersey with Oberon Realty, and we facilitate full service brokerage services as well as Liberty Real Estate Solutions, which is a separate entity. We really have a really nice niche that we've discovered in the real estate space. We like to do 1 to 4 units. Like I said, off-market properties. We work directly with sellers. We're able to really negotiate fantastic deals directly with sellers. These are motivated sellers that really have a need to sell and have a timeline they need to sell by. And we're able to facilitate a pretty seamless transaction with them. A great track record. We've got some really nice testimonials from sellers as well as investors now who've been working with us. I think that's about it. I have a background in marketing. I started a marketing company several years ago before I got into real estate called Giant Street that did very well in Brooklyn. I segued into real estate in 2016, started in commercial, and then found actually it's 2015 I started in commercial real estate, and then 2016 we created Liberty Real Estate Solutions because we really saw opportunity specifically in the northern New Jersey and some central New Jersey markets at that time to sort of really create a fantastic company that could serve a lot of people and create value. So prior to that, I was in show business for a long time. I still have my toes in show business a little bit. I was a stage actor. I traveled all over the country. I did Shakespeare all over the country. I've been in movies with Angelina Jolie and some other interesting people. You might see me pop up on an episode of Blue Bloods here and there. I also did some creative writing, playwriting, screenwriting, producing. What I love about real estate is that I'm able to create income passively as well as actively. And really, it's nice to be in control of our destiny as opposed to waiting for the phone to ring to see if someone will hire me to, do a show or a movie or something like that. And I think a lot of people are in that situation now where they're looking for other ways to make money as opposed to maybe just a 9-to-5 or this one thing that they do as an independent contractor. Real estate is really an excellent way for people of all walks of life to create generational wealth and do it in a positive way and in many cases in a very short period of time, depending on if you're following certain steps. So that's sort of my background and who I am. I think that covers it.
Definitely diverse.
Okay. Yeah, absolutely.
Okay, well, I guess that's a good segue into our conversation. So the first question, Kevin, that I have for you is, what is the difference between active and passive investing?
Well, in a nutshell, active means that you're there, you are hands-on creating equity in a property. So Liberty Real Estate Solutions is an active investment company, meaning that we are actually getting our hands dirty, getting in, finding deals, negotiating with sellers, finding good contractors, keeping contractors, getting the funding for the deals, selling the properties when they're finished, which it's a lot of work. I mean, it's a lot of work every day. So you're dealing with a lot of different personalities and a lot of different needs and a lot of different issues that pop up. When I started my entrepreneurial journey, I had a very good friend who had successfully started a chocolate company that she ended up selling for a lot of money. And you can go find, I think it's being sold right now in Walmart, but she's a brilliant entrepreneur. And she said to me, Kevin, you have to be prepared to be a firefighter. You're going to be putting out fires. If this is when I started the marketing company. And I said, what do you mean? She said, just like I said, there's going to be fires every single day that you need to put out. Problems are going to happen. People are going to have issues. You're just going to have to deal with it. And it's very true. As I get older and as I get more experience, the fires aren't as blazing as they were in the past. And they certainly aren't as scary as they were in the past. But that's really what it is. Active real estate investing is really getting in there. It's hand-to-hand combat. You're dealing with a lot of issues, and you're really having to find properties, sell properties, fund properties, fix up properties. It's a lot of work. And if you're a long-term landlord, you also have to have that skill set, which is a separate skill set from what we're currently doing, where you're having to deal with tenants, long-term tenants, finding tenants, making sure that everything is by the book and legal, and you're not doing anything incorrectly. And then licensing as well, being a broker. I'm a broker in 2 states. I'm licensed in 3 states. There's a lot of paperwork involved with that. I mean, it's a full-time operation for us. Passive income investing is really, I think it's the gold standard in real estate. I would eventually like to be in a fully passive situation as I grow older and look to retirement. Passive is really, you're putting money up for investment, and you're getting a passive return on that money. You don't have to find the properties, you don't have to find the deals, you don't have to spend money on marketing, you're not negotiating with sellers, you're not dealing with contractors or trying to resell it, you're not dealing with any of the headaches that come with being a landlord or a renovation company or a small business owner. You're really sitting back, making sure that your money is in good hands, which is something else we can talk about, and making sure that that you're getting the return that you want. That's really what it comes down to. It's night and day. I mean, you're really just investing. You're putting your money to work as opposed to you going to work. That's the simplest way I can describe it.
Okay, that definitely makes sense. So if somebody were interested in taking on a more passive opportunity, obviously there are some things that they would want to look out for in terms of who's going to be handling that investment. So what are those types of things that an investor should look out for when they're looking for a passive opportunity?
Biggest thing is track record. We didn't even consider going out to any investors, friends, family, nobody until we had a proof of concept track record that we could execute, find a property, execute on the renovation, resell it, and make a very good profit. We did that several times before we actually didn't even look for investors. We had someone approach us, and that was a nice feeling where we had shown them. They actually came to one of our projects and were talking about something else, and they asked, who we were and stuff. That's a nice way to do it, as opposed to, hey, I've never done a project before. I have a background in sales, or I'm an entrepreneur, but I've never actually done this before. I'm looking for money. I think in real estate, it is you really have to prove yourself on the street. I think you really have to go out, find a property. I mean, it's like hunting. You have to go out. If I were saying, hey, I'm going to go out and hunt and find and bring back this big elk. Have you ever hunted before? No. Have you ever shot a gun before? No. Have you, do you even know what you're doing? Why would anyone want to invest in that person? It doesn't make any sense. You really want to find someone with a track record, someone that has successfully renovated and resold multiple properties, or renovated, refinanced and held long-term properties. That's the most important thing, I think, and that's someone that is going to be able to bring the project over the finish line. Your money is going to be more secure than with someone that has just never done it before. I would personally stay away from investing with friends and family, just because, hey, they need a break. You're really not doing them any favors. I mean, I've heard horror stories of people investing with relatives, and the properties just sit and they don't, and the contractor quits. This is the first time the person's ever dealt with any kind of real business adversity. Thousands of things can happen with real estate. You can open up a wall and discover you've got a major structural issue, even though you've done all these inspections. You could find out you get a foundation issue, and now you need to figure out how you're going to fix that. You might have a global pandemic that happens, and the town's shut down for 6 months, and there's no inspections. You can't get any permits done. You can't get contract. You have to kind of go through the crucible of that before you talk about taking people's money and putting it to work deals. It could happen. You could get a great operator that's never done a project before, but you feel good about it. I'm not saying it can't happen, but if I were to invest passively, I want to make sure that person has a great track record, knows what they're doing, and really has a good, has a good system in place. If you're going to invest a sizable amount of money, I mean, we have folks that are investing, $500,000 plus with us. You want to see that there's going to be repeat business. You don't want to see that they're just getting their projects off, or their deals off the MLS or from like one wholesaler. You want to see that they're able to generate multiple projects per month, per year, per quarter, that you can turn around and have your money grow. I mean, at this point, we have investors that when the projects are finished, we say, hey, this is what you've earned. This is your principal. Where do you want us to send it? And they say, Kevin, keep it going for the next one. We just want to keep it rolling. And, if I don't have a project lined up for them, that's a problem. So you want to make sure that your company, that the company that you're looking to invest with, has the ability to acquire and correctly underwrite frankly, off-market properties. You don't want to have them overbidding, even right now when the market is sort of up and down, and there's a lot of question marks with, they just raised the interest rates again today. You don't want people overbidding for properties. Yeah, prices are coming down a little bit, but that margin should still remain there, what you're going to make on the property. So you can't overbid. And the best situation is when you really are one of the only buyers in this seller's periphery, and you're not dealing with a big competitive bid situation. That's the situation we have. We build rapport with sellers. We're able to do things that normal buyers aren't able to do. We're able to close on their timeline, anything in the property that they don't want to keep, furniture, appliances, any articles, we take it truly as is. And that's, I mean, a lot of people are from out of state, they're in California, the property's in Bergen County, they don't want to take a trip. It's much easier to work with us than to go a traditional route, list it, and have a bunch of open houses and end up selling to an investor at the end of the day anyway. I tell a lot of sellers, look, I've been doing this a long time, and they're considering going with a broker, say, and there's a problem with the roof, and there's water in the basement, and they're out of state. I say, look, I know how this movie ends. The movie's going to end selling it to an investor. Why are you going to go through a brokerage to end up paying 5-6% to sell to an investor when you can just sell to us right now? We'll close in a couple of weeks, and there's no real estate commission involved. So anyway, that's a long way around it, but that's it's super important to show that you've got for an investment company to show that they've got the ability to get multiple deals per month and be able to bring them over the finish line.
Of course. And I think a couple of the things that you had mentioned regarding, sourcing the deals and funding the deals and negotiating the deals and then getting them underwritten, that's a whole process in itself. And obviously, whoever it is that you're working with, they're responsible for that. Obviously, as that kind of active party in this process. So a lot of the times, I think as the passive investor, they don't really get to understand a lot of what's happening in the background. So maybe if you can spend a few minutes talking about what that process looks like, and then maybe talk about also what that process will look like from the investor side as well.
Sure. Basically, we do multiple campaigns. I'll kind of start with the process of how a deal is sourced and go from there and take you through the whole process from how it's sourced, purchasing, funding, reselling. So we do multiple campaigns. We do letter campaigns. We do a 3-touch mailing campaign. We do hundreds of mailers per week over 3 weeks. So each lead gets touched 3 times. We do an email campaign. We also are on the phones every single day calling sellers. The amount of money we invest in this per week, per month, is frankly a fraction of what we would be paying for a real estate, over price for a real estate company to be involved sourcing deals for us. So say it's typical purchase is $200,000. We're going to have to pay higher than that because there's real estate commissions involved in order for the deal to make sense. So that's why we're able to spend the money on marketing that we do. Typically, we will get a phone call back. A lot of people, it's hard. A lot of people do pick up their phones certain periods of the day, but I do get a lot of phone calls. We get a lot of phone calls in the office from the mailers. We will then do a quick conversation, maybe about 10 minutes, get some information about the property, identify how serious they are about selling, get as much info we can over the phone, and then set an appointment either that day or the next day. We found that speed is your friend in real estate. If you can be the first company buyer at their door, you're going to build rapport, you're going to be able to get your offer written sooner and get your underwriting going sooner. So that's usually how it is. We'll get a call on a Monday. We'll be at the property on Tuesday, doing a walkthrough in the morning. We'll get the photos. We'll get the video. Everyone, the whole team will look at it. We'll run comps on the property. We'll get an idea of what we think the estimate's going to be to renovate the property. You know, if it's a 1-bathroom property, for example, and everywhere, every property is a 2-bathroom, we obviously need to put a 2-bath in there, or 2nd bathroom in there. We figure out where we can do that, if we can do that. And if we have to add square footage, okay, how much is that going to cost? So we go through, we look at all the comps, and we determine, okay, this property, the after repair value is going to be probably 500,000, for example. That's sort of a typical, you know, Northern Jersey, you know, average price. So what we do is we go backwards from there and say, okay, let's take 30% off the top. So 30% is 150,000 of 500,000. So we're at 350. That's where we have to be before we factor in our repair costs. So let's say the repair costs are $100,000. Now we're down to 250. So really what we can pay for that property maximum is about $250,000. Now, a lot of people say that's insane. Who's going to sell you a property that's going to be worth $500,000 after you put in $100,000 for 250? That's insane. No one would do that, et cetera, et cetera. Well, if you're in a situation where you need to sell, there's problems with the property, you've got structural issues, you've got, you know, water issues, and you've got a cash buyer that can close in 2 weeks. And there's no mortgage on the property. You know, a lot of these properties we find don't have mortgages, so we're not dealing with the bank, which we like. We prefer that. Then they're excited and happy that you're there to buy the property that has all these problems. So that's a typical way we look at the numbers. We then go back to the seller, and we negotiate, you know, hard for the seller. Look, this is money that we are putting to work. We put our own money into deals. We put hard money into deals, which is private money as well. Our preferred hard money company is a family-run business in New Jersey that we've been with for years. They, you know, we want to do right by them. We don't want to bring them lousy deals that no one makes any money or makes a little bit of money. I mean, we really want everyone to do well. So we go back, we negotiate with the seller. We get a price that makes sense. Sorry. Yeah. So yeah, we do the walkthrough. We run comps. We figure out what the estimate's probably going to be. We then get the price from the seller that will work. We get it into contract. Now we're in attorney review. While we're in attorney review, we're doing inspections. We do a full home inspection. A lot of investors, a lot of companies that might be interested in doing what we're doing, you know, putting IRA money to work. I've heard a lot of them don't even do home inspections. I think that's a huge mistake. A lot of sellers will say, well, wait a minute, you're an investor. Why are you doing, you're just going to knock this down or you're just going to renovate it. Why do you need to do a home inspection? We say to them, look, this offer is not contingent on a home inspection. In other words, if we find, you know, that the stove doesn't work, we're not going to say, hey, give us $500. That's not what we do. I say, look, if there's a major structural issue or an environmental issue, then we need to talk about renegotiating. That's happened a handful of times. Because frankly, sometimes it's an environmental issue or a structural issue, and it's really not that much to fix. I've negotiated a really good price with the seller. I don't want to go back and kick them when they're down on that. I'd rather have them have a good experience with us. But if it's a situation where it's tens of thousands of dollars because of a structural issue, we're going to go back and create a better deal. So from there, we go back. We have inspections. We have a sewer inspection. So we have a camera that goes down the sewer pipe just to make sure there's no issues. We do that regardless if it's a finished basement or not. We just want to make sure we've got a really solid sewer pipe. A lot of these older homes have clay pipes. We don't like that. We like to replace them with PVC and make sure that it's going to last for another 100 years. So we do that. We also do a oil tank sweep, regardless of whether they say, listen, there's never been an oil tank in the property. I can tell you, you know, or we had it removed 20 years ago. We still do an oil tank sweep because in our experience, you can never be too careful. And it's always good to have that certificate saying, you know, nope, there's no oil tank. I also need it for my insurance. We go back, it takes about 3 days to do a attorney review. Once we get out of attorney review, we're now in contract. We put a deposit down, and now we've got about 30 days to close. We like to close even sooner than that because we like to get these properties, moving forward as quickly as possible. We start demolition usually the day of closing. So, or the day after. We'll have the keys ready to go at the property. Our team comes in there, does a full demo within a couple of days. Permits are put in with the town. As soon as we close on the property, the application's usually already ready to go. We typically do, plumbing, electric, building. If we're changing out HVAC, we'll do fire. We do everything that's required with the town. What we found is that we also like to do the CO inspections with the town too before we close. Even though we're doing a demo, even though we're doing a renovation, no one's going to be living there. We like to put our best foot forward with the town and say, look, this is who we are. This is what we're doing. Please come and take a look. And usually they don't beat us up too bad on a CO because they know we're going to do a renovation and get another CO when we're done. But we've learned to not skip that process. It's very important. A lot of other investors I've heard just go right into it. They skip the process. But it's better to have a good relationship with the town from the beginning. The renovations typically take a few months. It depends on a lot of things. Certainly with supply issues we've had the past few years, the process has taken longer. Weather is a factor as well. If you're buying a property in January, you might have some delays because of weather. But we factor in about 3 months to do a proper renovation. Sometimes we've done it a lot lesser time. Certainly in the summertime, it's easier to get properties done faster. And then as soon as we're done, we get a full inspection, CO. We do a full marketing campaign. We have our marketing team comes in, does video, photos. If you go on our website, you'll see that we have some really cool drone shots of the area and the house with music. And that's been really, that's a great investment because that's something that we can show investors down the line, properties that we've worked on, and it's still exciting and it's not, it's alive. And it's a nice record for us. We usually have an open house the Sunday after we've listed. We try to list on Thursdays. We like listing on Thursday afternoons. It's kind of nice because people are kind of thinking about the weekend on Thursday. We usually hit the MLS in the afternoon or Thursday morning, and then people go, okay, I'm going to go see that on Sunday. We typically do a best and final by Tuesday or Wednesday the following week. And we look for really good buyers that are well qualified and make sure that everything's been verified. And we close, as quickly as possible. And that's it. I mean, really, I would say it's from the moment I get the phone, we get the phone call in the office, funding the property. I skipped that part. Let me go back. When we get the property in contract, that's when we then do a full package out to investors, private investors and hard money. Some properties have been fully funded by private money. So folks who aren't professional lenders, they like the idea of funding the whole thing themselves. We have a property right now in Vauxhall Union, New Jersey.
Okay.
That was purchased. I believe the purchase price was $110. Renovation was about $100,000. It's going to be worth about $400,000. So we had a contract. We had an investor fund the entire thing because they were able to do that, which is nice. We prefer to go that route. It's better for us. It saves us some fees that these professional companies charge, which is nice. And obviously the investor's quite happy with the amount of money they're making. They've got a nice return set up. So okay. That's sort of the whole thing. I mean, I'd say it's about from the time we get the phone call in the office to the time we get it funded, to the time we close, to the time it's renovated and sold. I would say it's in the neighborhood of 4 to 6 months, sometimes longer, depending on the time of year.
Yeah, that
Yeah.
sounds like a pretty typical time frame,
Yeah.
given everything that's going on. So what does this whole process look like for the investor? I know you had mentioned there's that funding process where you send out, the opportunity packets to potential investors. So at what point, like, do they get involved? What does that whole process look like for them?
So we don't bring anything to anyone until we have the property in contract. And we know that this is a deal we are definitely going to purchase, whether it's going to be investor A or investor B, or our own money. When we get into contract, we go forward on that. There's been a few times when we've decided to walk away from deals because we found some issues in the property that we weren't prepared for. The seller, didn't want to negotiate. We walked away. I would say we walk away from more deals than we buy, certainly. The process for the investor, so they would get a full packet with photos, videos of the property and its as-is condition, an executive summary of a property presentation, which goes over all the comps, goes over what our renovation plan will be, why we think this is a good deal. We talk about the schools in the area, how close it is to major highways, transportation. We talk about what our game plan is in terms of renovating and how long that will take, what our estimated time frame is. We also give options for the investor to either do a monthly return, which will be a little less of an interest rate return for them, or if they want all of their interest due at the end of the project. Most investors go with the second option, which they want a higher return and have all the interest paid at the end of the project. And like I said, now a lot of our investors are rolling it over into other deals.
Okay.
So
And
that's really how it works.
is this a type of investment where you will like pool multiple investors together? Kind of just maybe some of like the mechanics about how it's structured and things like that may be important.
Sure, we have an amount of money that we look at and say this would be an ideal amount of money to raise privately for this deal. Say we have a certain amount of money that the hard money will pay for. It would be really great if we could get this separate amount funded over here. That would pay for acquisition costs. It would pay for some financing costs. It would pay for holding costs and in some cases down payment. So there's an opportunity there for a smaller amount of money, but a sizable amount, but smaller.
Okay.
So we have had situations where we have multiple smaller amount investments, 10,000, 15,000, 25,000. As long as we don't go over that cap and everybody's on the same page, hey, listen, as you can see in our literature that we sent to you, we're looking for X amount of money for this project. You're able to, some people, their IRA has about 20,000 in it. Obviously, if we're looking for 60,000, they're not able to do it out of their IRA, but they are able to do 20,000. Okay, so now we're still looking for 40. So that's what we do. We have our attorney, Angela Bagnara Law in Morristown, is an excellent attorney. We've been with him since the beginning. He draws up a promissory note, an agreement that details, everything involved with the transaction and the investment. And I know that with Next Generation, we've done several investments through you.
So it would be set up as like the investor would be listed in the note.
Correct.
Okay.
Listed in a promissory note, listed with a contract, but not a mortgage. There's no. What we're doing with these properties, because we have, unless it's a situation where the investor is the only lender investor on the project, that in that case we would do a mortgage. We would do a mortgage note with them.
Okay. That makes sense.
With most of the projects we do, we have a primary hard money investor, hard money lender that has a mortgage on the property. Because of that, we cannot have secondary mortgages on the property because this has never happened with us. But if something happened and they had to take the property back, there would be this other mortgage on there that they'd have to deal with. They don't want to get involved with that. So we're very upfront with our investors. Look, this is technically an unsecured note, but it is secured in terms of an agreement, a promissory note with an attorney. Their attorney can look at it as well. And it's also, look, if we're not going to build a business on taking people's money, not paying it back with interest, it just doesn't work that way. So we are invested, even though it's not mortgaged most of the time, we are invested in making sure our investors are happy with us and making money. That's the most important thing. So does that make sense?
Yes, yeah, definitely. So
Right.
before we get to some of the, I guess, SDIRA related questions, for myself, the last question that I have for you is, what makes this strategy so attractive for investors? And what are some of the pros and cons of maybe active investing versus passive investing?
Sure. I just wanted to do a little caveat on the last question, is that in the promissory note that we have with investors and in the agreement, we the LLC that we create and myself are liable for the note. So
Okay.
it's not like I say it's technically it's unsecured, but you do have recourse if something happens. Just want to put that out
Okay.
there. What makes this so attractive? There are a lot of options to, for investment right now. You've got the stock market, you've got cryptocurrency, you've got, starting your own business or investing in businesses, buying businesses that are already in operation. There's a lot of different ways to make money right now. I found that all of those have their benefits. I found that real estate, why I personally love real estate, I'm totally invested in this space, is the foundation of security that creates for us. I can't find anything that comes close. What's great about it is it's not something that is going to go away. There's not going to be an app that's created that's going to take away the desire to buy and live in a home, or rent in a home. It's brick and mortar. It's not going anywhere. That's really attractive. I mean, look, things have changed so much in the past few years, but the principles of real estate have remained the same, thankfully, and will remain the same. It's just the nature of the business. I like that with real estate. I think that passive investors understand that too. A lot of my investors have investments in other things. They have, they're heavily invested in the stock market. Some of them like crypto. Some of them are invested in venture capital, startup technology, which all those things are great, but the return we give them is consistent and frankly, I think pretty high, and it's not going anywhere. So they love us, and they keep coming back, and thankfully, and everybody's happy with it. But it's truly passive in that you're not going to be getting phone calls from me going, we failed the electrical inspection and blah, blah. They don't care, or they shouldn't care, because you're in good hands. When you're investing with us, you're in good hands. We always get the projects done. We get them over the finish line. And look, if it takes us 8 months or 12 months or 4 or 5 months longer than we anticipate, that's more money that the investors are going to make. If it's a year term and we're doing, we think it's going to take 6 months and it actually takes 8 or 12, you just double the expected return. So it's an excellent way to diversify and to really have a foundation of passive income. That's the best. And the other question was the difference between this and active.
Well, the pros and cons between each. So yeah,
I would say look, the pro of passive is that it's passive. You're not going to have phone calls in the middle of the night. It's great. The con of it is that you don't have any control. You don't have, you have control to a certain extent, but you don't have the kind of decision-making control. You might not like the color that we decide to paint the front door, and you think that might have some bearing on what it sells for in a few months. I personally don't think so, but I understand. With any passive investment where you're not the lead on it, you're not going to be making those decisions. With active income, the pro of it The pro of active is that you're going to make a lot more money. I mean, if you have the ability to source, fund, renovate, resell properties, you're going to make more money than the people that have invested in those properties. That's the beauty of the business model. There's definitely a pro there. I mean, if real estate is something you want to go full on and do, there's a lot of money to be made. It is a ton of work, and you will. I mean, I did not have some of these gray hairs when I first started. 2016. I've aged a lot, but that's just experience.
I'm sure the kids have contributed to that. Just
oh yeah,
a little
bit, maybe a little bit. You're right. And the cons of active is the gray hairs. I mean, you're going to be putting out fires. You're going to be dealing with, I mean, I learned this when I did commercial real estate for a year in New York. You think a property's going to be sold, the buyer's all ready to go, everything looks great, and it just falls through. That happens a lot with some of our deals. Because I shouldn't say it happens a lot with some of our deals. Once we've made an offer on a deal and it's accepted, I mean, 95% of the time we're buying it. But you might be negotiating with the seller for months, and you finally get to a point, and then all of a sudden they decide, hey, you know what, I don't want to sell, or I got another offer, and I'm not in the business of overpaying for a property. Like I said, I really don't want to be in a situation where I'm stressed out about the margin. It just doesn't, it's not worth it to us. But the con of active is that it's stressful. I mean, you're running a small business, you're running a show, you're running a marketing campaign, you're running everything. It's and as much as we outsource and team up with people, you're still managing managers, and you're still sourcing deals, and getting up there and going to bat and making phone calls that might be uncomfortable to try to get some interest from a company that might want to invest, or like I'm just thinking of like a fund or something like that, someone that doesn't know who you are.
Mm-hmm.
I mean, I like that though. I mean, I've always found that I make more money when I get uncomfortable and I get in front of people that I might not be familiar with, or an investment group I might not know. That's good. That means you're growing, and you're going to meet some newer people that might be able to help you in your journey. So those are the pros and cons. I would say if you're, I think also it's really important to understand and be honest with yourself about what your goals are.
Yeah.
Real estate is a lot of it is just the active income is really hand-to-hand combat, and it'll put some years on you, and it will definitely challenge you. And sometimes, especially in the beginning, you might not make the kind of money that you thought you'd make. I mean, all the numbers make sense, everything, but this happened, and okay, well, let's try for the next one. That can be really discouraging, especially if you're coming from a 9-to-5 situation, or some kind of a situation where you're an employee, and you know exactly how much you're going to make every month. It's really sales. It's sales heavy. It's an entrepreneurial pursuit.
Yep.
Doesn't mean that you're always going to hit it out of the park. But what I like about real estate is that it's a really smart kind of area to be focused on, because there's a built-in demand.
Yep.
Right now there is limited supply. I listen to the news. I obviously keep abreast of what's going on in the financial world and the world at large. But if you start going down the rabbit hole of, oh my gosh, the world's ending and interest rates are going to go up and no one's going to buy a house, et cetera, et cetera. The great thing about residential real estate, which is the 1 to 4 units where we're really focused on, is that there's always going to be an emotional need that does not care about interest rates, does not care about limited supply, doesn't care about the price. As long as it is feasible, it needs to happen. The kids need to go to school. I'm moving I have to go start a new job. I mean, there's an emotional human element to it that needs to be addressed and facilitated. And people, people have a need that needs to be filled. So I like that about real estate. It gives me a sense of security. and my, my investors and my family, I think of them as family, it's like, I want everyone to be in a situation where I'm not going to go back to them in 6 months and go, yeah, they created another app that, is better than ours. So we lost all of our money. Like, I can't even, I don't even know how you would do that. It just
Yeah.
doesn't fit to me. So that's sort of the pros and cons, I would say.
Okay.
I think that's pretty straightforward.
Cool. Well, I really appreciate you sharing all of your insight. I think this is probably a good time for us to start talking a little bit about self-directed IRAs.
Yes.
Obviously, this is the type of investment that I think personally would be a perfect fit for a self-directed IRA. So what questions do you have for me?
Well, I'm always curious, is there anything we should know about self-directed IRAs that you haven't already mentioned, like maybe things people misunderstand? I'm sure you get phone calls and they say, hey, heard that you can't do this, this, and this with it, so I'm not interested. But what do you think? I mean, maybe you can answer that.
Sure. So kind of going back what I said at the beginning of the presentation when I did my intro, we're a custodian and administrator for self-directed retirement plans, which is basically, well, most literally, exactly the same types of accounts that you would find at a Fidelity or a Charles Schwab, where you would, traditionally be investing in stocks and bonds and mutual funds, really anything that you would find available within the public market. A lot of what people don't understand about these types of accounts is that self-directed is not a type of account. You can self-direct a traditional IRA, you can self-direct a Roth IRA. There are different account types for business owners like SEPs and Simples and solo 401ks. You can even self-direct an education savings account or a health savings account. So there's a whole world of opportunity in terms of what you can do with these types of accounts. The difference between a custodian like Fidelity and then a custodian like Next Generation is what you're holding within those accounts. So when you're at Fidelity, like I said, you're kind of dabbling within the public market. With a custodian like Next Generation, a directed custodian where you are in control of the investment and you make all of your own investment decisions, you're able to kind of open that door of opportunity. So you've got obviously real estate, lots of opportunity in real estate, anything from residential to commercial. And this is all kind of like direct active investing. Then obviously you have your passive opportunities with something like with what Kevin's doing, or syndications, popularly apartment buildings, real estate funds, lots of different types of real estate strategies. Then obviously some of the other things that Kevin had mentioned earlier, private stocks. So if you want to invest in a startup or a private company, you've got cryptocurrency, you got precious metals. Really the only things that you cannot invest in using a self-directed IRA are maybe 3 or 4 things. So you've got life insurance, collectibles, S corps, and cannabis. Unfortunately, cannabis. I know that cannabis is a very popular investment class. However, most often cannot be included in a self-directed IRA, and specifically not with us at Next Generation, because our trust charter located in Sioux Falls, South Dakota, will not allow us to hold cannabis-related investments because it's still federally illegal. So 4 things that you can invest in. Everything else good to go as long as it's not publicly traded. Yeah, publicly traded.
Erica, can I just ask you one question?
Of course.
You mentioned syndications. What we do at Liberty, 1 to 4 units, these are quick turnarounds. We're not holding on to these properties. We're not renting them out. We have another entity that we're developing to do syndications in Florida, which would be industrial real estate syndications. So maybe you want to talk a little bit about syndications and how they work for people that don't know.
Yeah, so typically syndications, it's, from what I understand, it works similarly to a fund in that they're pooling the funds. And then of course, everything, is paid out either in interest or in dividends, based on the property's income and things like that. I don't know a lot about the mechanics. We've done a lot of education on syndications. So if you're interested in learning more about that, we have plenty of webinars on our on-demand page on our website. So you can go and check those out. But in terms of, real estate and including that in a self-directed IRA, especially those passive opportunities are really attractive for self-directed investors. And I'll get into that a little bit because there are a ton of things that you can and can't do with a self-directed IRA. The biggest thing that you really want to be mindful of when you're using a self-directed IRA is prohibited transactions. Prohibited transactions, there are 3 types. There's per se, extension of credit, and self-dealing. These all involve different types of obviously transactions. So movement of funds or movement of money that the IRS does not allow. The biggest one of those, per se, is when you're transacting directly with a what we call a disqualified person. So the IRA is prohibited from transacting with yourself personally. So, for example, you wouldn't be able to purchase a home or a property that you already own using your self-directed IRA. So you can't transact with yourself personally. You also can't transact with certain family members, like your spouse, your ascendants or descendants and their spouses. So grandma, grandpa, son, daughter, even adopted or stepchildren. And then of course, for your descendants, their spouses, so the in-laws, and then certain business partners, depending on the relationship, entities that are majority owned by a disqualified person. So let's say you want to invest in a startup and that startup is majority owned by your mom. You can't invest in that startup. Then there's obviously fiduciaries, people that service the account, and various different types of business entities that you would be disqualified from transacting with. So that's why sometimes these passive opportunities tend to be a little bit more attractive for self-directed investors because they're not having to worry about a lot of those prohibited transactions. At the end of the day, that, you're kind of just giving this person or this entity your money, and then they're kind of doing with what they need to do with it. And the only thing that you really need to be mindful in that situation is what is your relationship to that person that you're going to be investing with that's going to be handling this investment for you. And most often, as long as that's not a family member that I had mentioned before, so kind of going up and down that family tree. Obviously, like Kevin said earlier, you probably don't want to transact with your family anyways. It may not be a good idea. So this obviously makes it pretty attractive for most people.
The holidays are
self-directed IRAs. Yeah. Any other questions?
Did you want to kind of talk about the process? Maybe someone listening to this says, I really want to do this. I have some money. Maybe I have a traditional IRA. How do I get it to next generation? How do I become a self-directed, and how do I invest with maybe Liberty or another company?
Sounds good. So first and foremost, before you plan on giving anybody any of your money, or personally guaranteeing anything, you want to establish your account. So typically what that looks like is you're filling out an application with your personal information, you're signing off on some specific custodial related documents, and that typically takes about 1 to 2 business days. We currently have 2 ways in which you can submit an application. You can either fill it out either electronically or by hand and mail it in, or we have a completely self-serviced electronic option where you're completing the entire application via DocuSign, and then that gets sent straight to us to review and process. Once the account is opened, you get an account number, at which point we will hand you off to our awesome transactions team, and they will facilitate the funding of your account. It is important for me to note that once your account is, or once your application is signed, from that date of you signing the application, there is a 7-day right of rescission period in which we can't process any type of transaction other than working on getting your money from wherever it is now to us. So within that 7 days, we can't send any money out for investment purposes. So that's important to know. That obviously is just giving us time to make sure that, you know, this is what you want to do. And it obviously gives you as the investor the opportunity to back out at any time and say, hey, no, I don't want to open this account. And obviously there's nothing, you know, on your end at that point that you would be responsible for. So that's why we kind of have to adhere to that right of rescission period. But once that's over, then you can start the investment process. Obviously, at that point, that funding process may have already been started, depending on where you're at in your timeline. The account does not have to automatically be funded, just to kind of put that out there. You can establish the account and fund at any time that you want. But if you do have a specific time frame that we need to be respectful for in terms of the investment opportunity, we always ask that you just be transparent and let us know. That way we can work with your timeline and let you know how quickly that we need to get things done. Obviously, the biggest chunk of time that we're taking out of that process is for funding. So getting that money from wherever it is right now to us. You can do that one of 3 ways: through a contribution, which is just sticking some of your personal cash into the account, or you can transfer, rollover, or convert. So let's say you have money with Fidelity or Charles Schwab and it's an existing IRA. You would transfer that over to us. In most cases, that may take between anywhere from 1 to 3 weeks or 1 to 4 weeks. Very conservatively, we always kind of give a very broad timeline because, number one, it depends on the custodian that the funds are currently held with. If they don't want to let it go, if, you know, they require things to be originally signed or medallion guaranteed, those are factors that can certainly slow down that process. But generally speaking, we can get things done in a couple of weeks, depending on where the money's coming from and how quickly they move on their end. And of course, how quickly you need to move, because obviously this is something where you will kind of need to collaborate with that current custodian to make sure that they're staying on top of their game to get that money over to us. So once all of that happens, then we can process the funding documentation for the investment. And what that looks like on our end, there are several internal documents that will need to be filled and signed. And then we send the funds out to the investment, and pretty much everything is handled from there. I know that there's a lot that kind of goes on between that and maybe the sale, but generally speaking, that flow of money is obviously from one custodian to us to the investment. And then once that investment is sold, goes back to the IRA. And then from there, you can either reinvest the money into other opportunities, or you can, if you wish, you can move it back into a brokerage account to continue traditionally investing in the public markets. It's completely up to you. Like I said, it's a very self-managed process. It puts a lot of the control in your own hands. It allows you to diversify, hedge against obviously market volatility. A lot of the times these hard assets like real estate, they tend to bode well during times of inflation, obviously like we're seeing now. So that's what makes this, pretty pretty attractive for a lot of people, especially during these times.
And the nice thing about real estate too is that the ripple effect from the economy at large is not as severe. It takes a longer period of time for any kind of real disruption other than 2008, but any kind of real disruption in the economy to really affect real estate.
Not a lot of people want to talk about 2008.
Yeah, no, we don't want to talk about that. But I mean, even with in 2020, I mean, there was a time everyone was saying that real estate market's just going to crash. This was April, May, and we all know what happened. Everyone, so all the experts, all the smart guys, everyone who was on TV was wrong. So anyway, I just had another question about what the process is of, okay, someone's now with Next Generation, they've got their account set up. What is the process of investing in a passive real estate opportunity with you folks?
Yeah, so like I said, there's going to be a series of documents that they're going to need to fill out. For the purpose of this conversation, we'll kind of use your opportunity as an example. So in this case, it would be a note investment. So we have specific documents that they'll need to provide, obviously from you, like the actual note agreement. And then all of those documents we will sign on behalf of the investor, via the IRA. The IRA is technically the investor in this case. So all of those documents that we would collect internally get signed by the investor. And then the documents that you guys would need to have signed would get signed by our office on behalf of the IRA.
Right. And so I think you talked about some of the documents. I know that as an investment company, what we provide to some of your clients are things like a certificate of formation for the LLC,
Yes.
certificate of good standing. Obviously, we always do title work for the properties we buy.
Yep.
We're very upfront with everything that we have.
Yeah.
I know that you folks need that EIN numbers, everything. So
yep.
Everything's. Are there any fees that are charged? I mean, obviously, you guys.
That's always a popular question. If you want to talk a little bit more offline about our fees, I'm more than happy to do that. Our fee schedule is public knowledge on our website under our forms bucket. But to break things down, we have some recurring fees and then some kind of one-off ad hoc fees. Your one-off ad hoc fees are going to be your transaction fees, like purchasing an asset, selling an asset. Really, anytime that there's a movement of money or a movement of funds, there will probably be a transaction related to that, transaction fee related to that. But then we also have an administrative fee, which is something that we either collect annually or quarterly based on the option that you choose. We currently have two options. So one of them is an asset-based. The other one is a value-based. So the first one is I have one asset, so I'm being charged $325 per year per asset. So if I have two assets, it's $750, so on and so forth. The other one obviously is value-based. So how much money do I have in my account? In terms of cash balance, and what if any assets do I have in my account? What are they worth? So between what my asset is worth and how much cash I have in my account, there's going to be a fee based on that amount totaled. So what I like to say, if you only have one asset in your account, and that asset plus any cash that you have is valued over $30,000, it would be more cost effective to be on option one. Because like I said, once that value in your account starts to increase, those quarterly fees start going up. So if you only plan on having one asset within your account, then it may be more cost effective to be on option one.
Makes sense. Are there any common questions? I know that I have some people that I know who are in the investment space, traditional investment, IRAs, 401ks. Are there any arguments that people can make to folks to scare them away from a self-directed? You know what I mean? Like, oh, you don't want to do that.
There are always ones. I mean, people tend to think that there's a lot more risk involved when you're self-directing. But what we like to tell anybody that comes to us with those misunderstandings or misconceptions is that if you're going to use a self-directed IRA, most often the people that are using self-directed IRAs are knowledgeable within the specific asset class that they want to invest in. So they'll have prior knowledge or experience investing in real estate. They'll have prior knowledge or, experience investing in cryptocurrency. They'll understand, precious metals markets. They'll understand, startups or investing in private equity. Self-directed investors tend to be very savvy and usually already have some sort of investment background. But one and the same, we get people that have never done this before and are successful. And that's because they work with custodians like Next Generation that deliver top-notch education. So we really, as a custodian, we really handhold people through the process and make sure that they're aware of what they can and can't do. But not only that, anytime someone invests in anything, the reason why we go through and ask for all of those documents that we ask for is because we do a compliance review. So we're looking at those documents, not necessarily to do any, sort of due diligence on the investment itself. Obviously, that would be the responsibility of the investor. But we are looking to see if there's any risk for prohibited transaction. Our main responsibility as a custodian and administrator for holding these accounts and custodying the assets is ensuring that our clients maintain the account's tax advantage status. So that's one of the main things that makes these accounts attractive. It's a tax sheltered vehicle for their investments. So at the end of the day, if you do something that's prohibited, you're losing that tax advantage status because you're now risking those assets being distributed to you personally. So at that point, if you're not at retirement age, which is 59 and a half, you're responsible for early distribution fees and any penalties related to the prohibited transaction itself. So for a lot of people, especially if you're, directly invested in real estate, that could be a hefty price. So having that kind of compliance review is really important for us and for any custodian, because those are the things that we're looking out for.
Right. Also, the maximum amount you can invest in an IRA for a self-directed IRA is the same as any other IRA, right? It's, I think it's $6,000 per year now.
So not invest; those are actually contribution limits.
Contribution.
So
yeah, right.
those are limits where like you can't invest more than $6,000, or you can't contribute more than $6,000 of your personal cash into the account. But if you've got, $500,000 or $1 million sitting in an IRA, that can absolutely be transferred over into a self-directed account for you to invest alternatively.
If someone has a 401k and maybe they've switched careers, they've started a business, they've got a 401k from an old employer,
they could roll that over.
You work with them?
Yep. So that would be considered a rollover. So anytime money is coming from like an unlike account, so we say unlike account as in an employer sponsored plan, so a 401k, a 403b, a pension, really anything where if you were previously with an employer and you just kind of got money sitting in this 401k somewhere that you have no idea what to do with it, you could, obviously in some cases, if you're moving jobs, you could just roll that into another 401k. But if you don't want to invest traditionally in the markets and you've got enough for real estate investment, you could certainly roll that into a self-directed IRA.
Excellent.
I think we may have a couple of questions for, okay, so I'll get to that one at the end. Perry wants to know if there are any issues with combining personal funds with the IRA funds when investing with your company, as long as you stay within the IRS constraints. So that's actually a two-part question. And And the answer is sometimes yes and sometimes no. So most of the time, like I said, you're prohibited from transacting with yourself. So you can't, you would not be able to further fund an investment using your own personal funds. But if you wanted to partner with yourself, so essentially your IRA is one investor and then you personally are the other investor, you could partner yourself with your IRA on a deal where you're contributing both retirement income and personal income. However, in that type of situation, you would need to maintain certain percentages. So that would need to be determined from the start of the investment, where in that if you want to contribute $20,000 of your IRA money and $20,000 of your own money, that's 50 and 50. So you need to maintain those percentages throughout the investment. So this happens more so when you're actively investing. If you have like expenses that needed to be paid, like you needed to pay a contractor or a plumber or a landscaper, 50% of those funds need to come from the IRA, and then 50% of those funds need to come from yourself personally in order to cover that expense. So in terms of the percentages of ownerships in that entity or investment, those need to be maintained throughout the life of the investment. Hopefully that answers your question. And I guess, okay, I'm sorry, I may have misunderstood that, but the question, I guess, was intended to be directed to Kevin. But I did want to address that because that would be an IRA restriction. So I guess Kevin, he wants to know if he can, with you, combine his personal funds with IRA funds for an investment.
And I would defer to Next Generation or another company, whatever their rules are. For us, it's just about, we have a certain amount of money that we're looking to fund. How we get there is might be different every time, but as long as everything's recorded and everything's above board in terms of regulation and what you need to do if you're using IRA money or self-directed money, yeah, that's fine with us. For us, it's just about the amount of money we need for the deal.
Okay. All right. So I think that concludes our conversation. I know that there are probably some people here that would like to get your contact information. So for the sake of the people that are here live, and then for the sake of the people that are maybe watching on demand, if you can just verbalize your contact info for everyone.
Sure. You can go to our website, libertyrealestatesolutions.net. Liberty Real Estate Solutions right here. You can also email us at info@libertyrealestatesolutions.net. You can also find us on Instagram, Facebook, Twitter, LinkedIn. Yeah. And
Okay.
YouTube. We also have a pretty active YouTube channel with all of our projects, older projects, newer projects. You can see some nice finished renovations that we've done.
Awesome. And then likewise, if you would like to get in contact with myself or Next Generation, you can email newaccounts@nextgenerationtrust.com or visit our website at www.nextgenerationtrust.com. And with that concludes our conversation for today. I want to say thank you very, very much to Kevin for joining us today. You provided the audience really good information. And as a quick announcement for everyone that's here with us live, unfortunately, going forward, our webinars are only going to be offered on demand. So this is the last time that you'll see us live. So hopefully you guys will start signing up for the on-demand versions, but this is it for us from a live perspective. So I will technically see you on the next one, but not live. So thank you everyone for joining and have a great day.
Thanks, Erica. Thanks, everybody.
Bye, guys.
Bye now.